one stock that was holding up yesterday was Reliance, and there is a near-term trigger perhaps. Shein, which was, remember, a banned Chinese retail apparel app in India, has made a comeback, and now the India relaunch, which is with Reliance Retail, the app has launched on February 1st. So the big fear for Trent is whether that's going to eat into Zudio's business or not. Let's analyze this piece. We've got Karan Tarani joining in on the show right now from Elara Securities to tell us about. Karan, hi, morning. How big a threat could Shein with Reliance Retail turn out to be for Zudio?
Hi, Aisha. Good morning. So I think Shein coming in the market obviously is going to be a disruptive force because if you look at the pricing of Shein, it is largely on par with Zudio. That's the first thing. And secondly, they kind of bring a lot of global expertise in terms of styling, fashion, where, Zudio has an edge ahead of the peers that they have. But I think it's a long haul because Shein is coming to the online market. And the online market is quite fragmented. And if you look at Zudio, they are only in the offline market. So both these markets are very different in terms of the way they function. Online market is crowded by multiple platforms with the likes of Myntra, Amazon, Flipkart, Meesho, and Ajio, so on and so forth. And if you look at Zudio, I think they are primarily the offline play. They don't enter the online play as of now. And I think as per our assessment, they don't have any plans to enter online as of now. So I think both these are very different propositions. There might be some negative impact, but not a very big one because the models are separate, the monetization models are separate, the online offline models are separate for both of them.
Do you think Trent is falling because it was expensive and this fall was overdue? There is no point in blaming it on this app, that app. It was expensive and it is falling. As simple as that. Story over.
Yeah, I think Trent does have concerns in terms of growth. So there are two concerns here. One is in terms of increased competitive intensity. We are seeing a lot of new players coming in the fast fashion segment. Companies like ABFRL, companies like Shopper Stop have got their own fast fashion brands right now. If you look at the older companies, the value retail players, Vishal, Megamart, V-Mart, Style Bazaar, it's quite a crowded market. Max Fashion, there are about 8 to 10 players in the fast fashion segment. Clearly, the reason for that is that this is the segment which is most attractive in terms of growth. It's growing at about 25-30% plus. So there are concerns as far as Trent growth rates is concerned. So the first thing in terms of increased competitive intensity that could add pressure on Trent's growth rates. But the second concern is around store addition. So I think Trent right now stands at a very reasonable number in terms of number of stores at about 600. We do see store addition going ahead. We do see about 1,000 stores coming in the next 3 years. But beyond that, how things scale up is a challenge. Plus, they have also done consolidation in the recent past when management has indicated that they've shut down stores wherein there is fortressing of market, there's an oversupply situation, throughput of the new store is not being good. So there are concerns around that. There are concerns around growth because of competition. There are concerns around store addition as well.
Would you buy Trent at these levels? I mean, optically, some would look at the screen and say, "Arey baap re, kitna gir gaya, 750 ko 5000 ho gaya," right? That's the first impression everyone has when you see a stock fall like this.
So I think we would recommend we have a buy rating on Trent. Primarily the reason being that the stock has obviously come off in terms of valuations. We cannot expect the stock to grow at 50-60% CAGR as compared to what it was historically. And we cannot even expect the valuations to hold on at those kind of levels. But at these levels, I think the valuations appear quite reasonable. Risk reward is quite favorable as well. We don't see much of a downside for Trent from here on, primarily because Trent is a fast fashion based player. If you look at the other players in terms of value retail part, they primarily focus on pricing. And if you look at Trent, they focus on pricing and on fashion. So we believe that despite increased competitive intensity, Trent will continue to have its edge. And that's the reason we are kind of positive on Trent. Second big reason is the market, right? So the fast fashion market is growing at about 30-35%. So there's ample opportunity to penetrate, to deep dive further. And third is, of course, the product assortment, the Gen Z cohort, which Trent has, kind of got it right. If you look at the other value retail players, the other fast fashion players, they are kind of confused. Some are going for the family, some are going for women. So I think Trent does have a moat. And right now, we don't expect the 30-40% upside to come in the near term, maybe 6 months, 8 months. But from a 2-year horizon, definitely, one can look at Trent.
Okay, Karan, thank you so much for that analysis and good to have you